Okay. The idea behind the hedging is to come out profitable and to continuously etch more profit little by little. Okay, so last night I went to bed with this trade open. I'll show you the technicals in a minute, but I was long the MNQ, and right here, the MNQ, and I was short the MES, right? So we have this difference in price, 148 positive, 119 negative, right? So there's a reward right there, and it can go against you, but the point is, it has to be going positive, and you got to keep a record, make sure, because otherwise you're taking away from one, right? And you're giving to another one, but more than you take away. So when you average out your price on all your accounts, even if you're using real money, you'll still be net profitable overall, going up. And that's what I'm looking to do. I don't care that I have a loss. I don't care if one goes down. What I care about is, did I make more on the one that won than the one that lost? If I can consistently prove this to myself over time, I think I have a system that might work. It's not my only trading system. The hedging is just one idea I'm playing with. Okay, so that's what happened last night. Today's a new day, Monday. I'm going to see how this goes about entering in a new trade, and I'll let you know how the video continues. Okay, here's an example where I'm just going to get long, because on the account that I actually drew down on, the one that was negative, I'm going to use that one to go long because I still believe it's long now. So if I'm more biased to the long side, there's no reason to hedge all the time necessarily. So I switched the account over here that I was short on, and I'm going to start putting money back into that account, hopefully, if it keeps going up. I mean, that's the plan, right? So the one that I was down on over here, I'm going to go long because the long side was working, and I'm going to try to get that back up instead of keeping it down. So I'm trying to bring the accounts all up together. So let's see what happens in this situation. I may throw on another hedge once it gets up high enough on a different account, which is what I probably should do. If this were to get up high enough, I could lock it in, so to speak, by putting on a hedge on another account. In case it drops, I'll be gaining money on the other account. So I'm going to see what happens here. Okay, so I brought in a third account, the first two that were hedged together, and then I took the loser of that hedge and started pumping in the long side over here. When this got up to about $55, $60 or so, I went ahead and threw on a hedge over here. Now you see that's positive over here. So if it drops, this side's going to actually gain money. It's a third account. It's a different account. I don't really want to give back the profits that I made on anything, so I pick a different account, trying to bring them all up. Okay, so there we are. That's where we're at right now. We started off with a hedge, and then I took the losing side of that hedge when I woke up this morning and went long on it because I believed in the long side. When it profited enough, I took a third account, a separate account, and I shorted an MES. Okay, so that's where we're at. All right, that turned out. Getting the direction right is pretty important. But the one that we were a negative on, and turns out to be positive now. So this one down here was negative, and we brought it back up to positive. So we had the 148 and the negative 109 or something like that, and now it's positive because we unhedged and we went long on the one that we had lost money on. And so we're doing a couple other accounts right now, doing the same thing. Long. See, I'm long a micro. I'm long a micro on this account, and I'm short. I let this one was short from the other hedge. I sold. I had two micros right here. Bought it here, sold it up here. But I kept on the hedge of the one micro MES, and I just went long one MNQ on a different account. Hope that makes sense. So I traded the hedge that was happening up here. These two were hedged. I traded this hedge, closed this one out, and I hedged over here with one micro against this one up here. So now we have the hedge on this side with these two. Remember, we're only hedging the MNQ and the MES, the two micros, okay? And we're looking for divergences and stuff like that to give us a positive net value. And it's tricky. It's tricky. They don't move the same, and the value of the ticks are different, and the momentum's different. But there's enough correlation to give us a high probability that if one goes up, the other one will eventually go up. There's enough correlation, not guaranteed, not at the same time, not instantaneous, but eventually they do sort of move in the same direction. And that is what we're trying to trade against. All right. The correlation is good, but the divergence in that correlation is where the money is made or lost. The divergence, the difference between the two, is where the money's made. And hopefully we are able to kind of read price action, structure, and things like that to kind of get a good understanding of what could possibly take place, and then hedge a position or not hedge a position. Like, once I came in this morning, everything was bullish. I put a heavier hedge on with more on the bullish side, and it worked. And we made back the money we lost when we were shorting over here and price went up. We lost money in the morning, and I woke up. And so on this account, we made it all back. And so there we go. All right, so that's where we're at. That's the trading we're doing. I'm going to keep a record of how this day ends and what the total profits are on this today. You'll be able to see the final results here in soon as. One more thing, I'm definitely going to try to stick to my risk management. My plan really for this, in terms of risk management, is to not lose more than $500 on an Apex account. Now, a trade can lose more, because I might have already made money in that account and it's up already on the day. And then I'm talking about losing $500, or maybe I should do it the way Apex does with my own system. $500 drop from the high point and I have to stop. That's a pretty reasonable and sensible way. I didn't like that Apex did that, but now I like it as I'm becoming more professional in money management. That seems to be if you're going to lose $500, it's $500 no matter what, right? And if you make $500 and then you give it back, that should be your limit. I'm not saying I'm going to do it for sure as a commitment, but it's not a bad idea, really. Okay, so let's see what happens. We're getting a pullback here. If we get a pullback, if we get a drop, then I'm hedged over here with this MES position. Only 1 micro. We're long down here 1 micro. We're red on both a little bit by $30 or so. And eventually one should, well, we're hoping that we get a net positive value on this before the day's over and not lose more than 500 in each account. All right, so I'll let you know what happens. Let's record this. It's one of those things you don't want to see. You don't want to see the one you're short continue to go up while at the same time the one you're long goes down. Then the divergence is negative. You want a negative divergence, but you don't want it to be negative being both sides are against you. That's the worst. Okay, this is where we have to have an automatic panic close flatten button that is mandatory, because if anything happens, you have to have a stop loss. You have to get out. I think ultimately $1,000 could be my target goal for the daily loss limit. Right now, I have a $500. Close the account, close down everything. Don't lose more than $500, and that's hard. But I did it, and I was proud of myself. Thank God I had some self-control in that. And if I've never seen, the market can do anything. And as I journal this thought process, I've got to be ready for battle in a situation I've never trained for. Sometimes this stuff happens that's so new and that it can throw you off. You have to have rock solid ice in your veins, tenacity to close the trade when it's a loss. You have to have that rigor and determination to coerce yourself to do what you have to do. All right, so now they're correlating better now. So what's happening is the one that I want to go long came back around going up with this one. This one stayed kind of flat to up. Didn't really go down that much while that. All right. Anyway, just want to put that in the video today. Okay, this is what I want. Immediate reversal of the negativity. I want this one to go up. This one moves faster and stronger. This one can gain a lot faster than this one can lose most of the time if it's moving. But this one has been able to outpace, and that's the speed and momentum in a direction, while this one is consolidating also. And then every once in a while they go in the opposite directions, which is a double negative. You don't want to lose in both directions. You want them to stay, going in the same direction, even if it's not perfect. You want them to correlate to the same direction, and they usually do. And I would say most all the time they do. In the big picture, they do go in the same direction, but they can whip and snap in two negative correlation against you, and it hurts. It's scary, and that's why you got to have the stop losses in place. Okay, so as soon as this one gets over, there's 60 now. As soon as it gets over that, now it's 68. So now we're only $8 down. We were about $60 down, and I am bullish, so I'm unbalanced really to the bull side. All they got to do is stay correlated, and this one will, the one on the right will eventually surpass the one on the left because it just moves faster and stronger. So as soon as that happens, take profit, reassess the situation, maybe try to find a better entry for both of them. I need to really get better at getting in these trades because I just jump in them and just want to experiment with the hedge itself. And I want to see what any situation, and there's some bad situations, there's bad timing, and it happens. So there's got to be better timing, and I want to discover those times to get in that are better. Now, let's take a look at this. For instance, this trade setup down here. This trend line break is what I was looking and watching for, and it had a perfect red bar ignored consolidation breakout right there. So right there would have been a good, and I got it a little higher. I got it up here. I got it here when I should have got it down here. Yeah, that's those kind of entries make a difference, right? They really do. I wouldn't be negative right now if I had gotten in there. Now, where did I get in on this one? Yeah, I got in closer to any kind of a trend line break on this one. Yeah, trend line break this way. I got in right there. For the short, I got in there first, and then I jumped in the long later, and that was it. I didn't do it at the same time. So it's harder for it to catch up, but hopefully it'll catch up. Okay, so what happened was this one started taking off. The MNQ started taking off, $108, right? And now this one's $100. So we're positive $8. We were negative 60. So I can try to let it get up to over 60. So I could just let it run. Let's see what happens. Now we're green, so we're okay. Making adjustments throughout the day could happen though. I could take $50, to be happy with that, and or I could just keep on trying to trade it. I could try to add some MES over here. Like if it gets really gapped, like if this goes up to, if I'm up $200, then what I can do is to lock that in. I can just short some more MES over here. That way, if price drops on me, this one will be heavier in micros, and it'll be favorable to lock in profits and reverse any damages. So hedging like that is what I could do. So right now we're about break even, and I'm just going to watch it. And if I end the video here, I'll see you in the next one. Peace.